Good morning. Why clear height is money? And in industrial real estate, clear height is not a design feature, it's a revenue multiplier. And for commercial real estate investors, developers, and business owners across Houston, Katy, Fulshire, and the I-10 West corridor, understanding clear height can mean the difference between, say, average performance and a premium valuation. And let's break down why. So, what is clear height in industrial real estate? Well, clear height refers to the vertical distance from the finished floor to the lowest structural obstruction, typically your steel beams at the top of the surface. And in simple terms, more clear height equals more cubic storage volume, so more space. And modern Class A industrial buildings typically range from, say, a 20-foot clear height to a 32-foot clear height to a 36 plus foot clear height. And older inventory may sit at, say, 18 to 24-inch clear heights. And that difference is not cosmetic, it's economic, is the point. So, why does clear height drive rent? Well, tenants don't rent square footage. What they're renting is the usable volume that they can keep in store. So a 36-foot clear height building, allows basically higher racking systems, so more storage, more pallet positions, and better e-commerce logistics, but also improved automation capability within the building. And what that does is that translates into a higher efficiency per square foot and a lower cost per pallet stored, but also greater operational scalability. And landlords that capture value through higher, will see that they can capture value through higher triple net rental rates, but also lower vacancy. People are sticky and want to stay. And there's good, strong tenant demand with taller buildings. And in Houston's industrial corridors, 32 to 36-foot clear buildings consistently command rent premiums over the 24-foot variety. So, clear height and property valuation. Commercial property value is driven by NOI. And if higher clear height supports a higher rent per square foot, stronger tenant retention in your buildings, but also longer lease terms. And also, it directly increases your NOI. And since industrial assets are valued using cap rates, a higher NOI divided by a higher cap or a cap rate will give you a higher value, is the bigger point. And even a half of 50 cents to a dollar per square foot of rent premium across 100,000 square feet is going to materially shift your valuation. And that's millions in equity, and that's the point there. So, why Houston industrial buyers care? Well, in Houston, particularly along the I-10 West corridor, but off the Grand Parkway, and also in port-connected logistics corridors, demand is increasingly driven by a few things. First being e-commerce and fulfillment, but also energy supply chain distribution, but also manufacturing and reshoring operations are taking place, and 3PL operators. These users require vertical storage capacity is the point, and clear height directly impacts your functional obsolescence risk in the building, but also your exit liquidity. Somebody's willing to pay more for a taller building. It also gives you more refinance options if you own a value that's worth more. And if you own 20-foot clear height inventory, your buyer pool is going to narrow some. But if you own 32-foot plus clear heights, institutional capital is going to notice, is the point. So let's look at this from a developer perspective. Would we build for hire or lose after? And for developers evaluating new construction in Katy or Fulshire growth corridors, cutting 4 to 6 foot of clear height can reduce steel costs, but also it's going to limit your tenant pool and reduce your long-term rent growth, but also compress your exit pricing so you'll be able to sell the bill for more with taller clear heights. And lenders also write your long-term competitiveness. So we should look at it from a ground up construction financing way. And that's basically going to favor more modern specs, higher clear heights, but also adequate dock ratios and ESFR sprinkler systems. Like to see 32-foot plus clear heights. And shortcuts create refinance challenges later is the point. So let's look at this from a business owner perspective. And if you're an owner user, your clear height's going to affect your inventory capacity, so how much you can store, but also how much you can expand, and also the resale flexibility when it's time to move on. And you may not need 36 foot today, but your future buyer mind is the point. And industrial real estate is an operational decision first, but it's also a balance sheet strategy, so you got to weigh the two avenues. And the bottom line here is that clear height is leverage, and what it does is it impacts the rents you can command, but also the property income you're going to generate, so your NOI. But higher clear heights are going to increase your values, so you can sell it for more. But it's also going to increase your tenant demand and also your long-term liquidity for a building that's in demand. So in today's Houston industrial market, vertical space equals financial space. And if you're acquiring, developing, or refinancing industrial property in Katy, Fulshire, or West Houston, let's underwrite the vertical. My name is Bill Rapp. I'm with the eXp Commercial Viking Enterprise Team. I'm a capital advisor as well as an industrial investments assets broker. Please reach out to my website, HoustonRealEstateBrokerage.com. Love to talk to you more. Hope you have a good day.